Good afternoon to all participants, and we welcome our speakers for today's session. Mr. Anuj Bhatnagar from BIS, Ms. Aswini Mavin Kurve, Tanushka Oja from SGS, and Mr. Bhaumik Amin, Director EHS and Sustainability from Morgan Advanced Materials. So I welcome all speakers and welcome all participants on the last session of this World Quality Month 2023. So we had a marathon of webinars in this month, and we could spread awareness with respect to various regulations, various certification standards, various private schemes during this month of November 2023. And today is
across sectors, I would say.
Yeah, to across the diverse sector. And today is the we are ending our marathon of this World Equality Month with the most demanding topic for today's business marketplace, that is the ESG. I am Ankit Patel, your host and host for today's session. Along with me, Mr. Ram Kumar is co-host, Mr. Atul Mathur is co-host. So I welcome you all people in this webinar. So I will just start the webinar with the introduction of our MSCC and CCC, the two consulting association whose efforts are basically is at significant level during this World Quality Month. And we are educating various industries, even including interacting with consultants across the India, certification bodies, regulators, private scheme owners. So I'm just sharing the brief introduction about the MSCC. So MSCC is formed, and it's a pan-India association of consultant, management system consultants. And the basic intent to form this association to help industries to contribute into business excellence in free flow of information and value addition to the business owners and ultimately to the nation India. And this is registered society at national level. We are registered at New Delhi, and we have a diverse set of consultants in our association, naming just few: IT consultants, marketing consultant, ISO standard consultants, financial consultants, product certification consultant, cost consultants, technical consultants, and many more. So we have just started this association, and the communication were ongoing since last 4 years. So CCC was the first association who has started the formalizing such events, and we have joined them as MSCC from this year. Now I would request Ram Kumar sir to have just a few words about CCC, and then we can start with the speaker introduction.
Thank you, Ankit, for that. So, as Ankit described about CCC, it is Consultants Consortium of Chennai, wherein which we the association was formed 3 years back and formally registered, and we are registered under the Societies Act, Government of Tamil Nadu, located at Chennai City in Tamil Nadu, India. But it's a forum for management system consultants and other allied consultants, has already been outlined by Mr. Ankit. So the same objective, the same motto, this association was formed. And at pan-India level, MSCC is operating. At Southern India level, Consultants Consortium of Chennai is operating. And we are an association who work very closely with the industry platforms. So we believe that the industry connectivity is always important for any of the consultants to work hand in hand with the industry. And also the governing council members comprise of senior business consultants with many years of connect with the industry. That's the major advantage of CCC. And the primary objectives of CCC is to promote excellence, professional competency, and ethics, which is very important. We regard ethics in the profession of management system consulting as a lot of fake and other tout certification bodies are floating. We know, we are aware of it. It's a very hot topic. So we want to be more specific about ethics in the profession of management system consulting, and to ensure service of quality and value is imparted in the industry of management consulting by disseminating knowledge. So such knowledge sharing sessions only we have been into, and we have been hosting a lot of seminars and webinars way back during Corona period. Also during lockdown period, we have organized many seminars and many webinars, in fact, on various topics, which is useful for the industry as well as for the consultants, providing ongoing education, learning opportunities, and monitoring mechanisms, and to provide skilled and competent consultants to the industry bodies. That's very important for upskilling of the consultants is very important, because every day there are a lot of new standards which is coming, particularly in the sustainability sector. A lot of new developments are happening day in and day out, and we want all the management system consultants to keep abreast of their own knowledge domain and get the first-hand knowledge from the domain-specific experts. As we are now hosting the quality month, all domain-specific experts only we are calling for all these type of webinars, and to disseminate and strengthen the knowledge among consultants in connection with the profession to the industry. So to standardize the consulting practices, that is also very important motto for us, and to develop, educate, enforce, and administrative code of professional conduct. As I already told you, we believe in ethics and other related code of conduct for and etiquettes for the members of the association and also the consultants. So objective is to focus on industry education, promoting quality as a part of national quality mission, and to promote various management system standards that are needed for the business across the sectors, to be the representative voice of management system consulting community. And we have been getting a lot of support from the certifying bodies, from the accreditation bodies, from government bodies as well as regulatory bodies, and also from the industry associations as well. And to focus on knowledge dissemination to the industry on an ongoing basis about standard, certification, accreditation, inspection, regulations, etc. So now that today's topic also ESG is definitely everybody has realized the importance of ESG now, and that's the way we are choosing the topics also for our webinars. So primary members will be the management system consultants, and allied members have been listed down here. Other allied consultants also, we enroll them as allied members in our association. And we are having a membership with Andhra Chamber of Commerce and also the Indus Entrepreneurs Network TIE Chennai. And also we have got a lot of recognition and appreciation from regulators, national standards organization, accreditation bodies, and certifying bodies. And we have been connected with now. It is actually this number would have gone up now. Maybe 20,000 plus audience might have been come. Maybe this slide when we prepared it was 10,000 plus. When you see our own YouTube channel also or our own LinkedIn thing, a lot of followers are there and a lot of followers for our website, visitors for our websites are also. These demonstration that many people are connected with us. And our aspiration is to encourage more consultants become members of this association and lead industry engagements, and to strengthen the voice of CCC across southern region. And of course, now we have formed the MSCC, wherein we are playing a major role in pan-India level, and to be the representative voice in some of the state government initiatives, and to educate industry to choose responsibly quality certifications, and to focus on upskilling youth. We believe in imparting knowledge to the youth and encourage youth to take consultancy as their main profession and come up in the industry. That is one of our motto, and to think, to dream, to breathe quality in their career path, to create good quality ecosystem. And but recently we had a very nice program for medical devices with Anna University, and that was well received by the university students and also the professors. So to dream to be a part of the international network representative platforms. And future initiatives, monthly, we want to host one consultant meet every month, maybe virtual or physical, and monthly one industry sessions, and monthly one students upskilling session, and joint session with the industry bodies, regulations, national standards organizations, etc., and one annual national conference of management system consultants and other allied consultants. These are our future initiatives, and that's all. Thank you very much. Once again, I welcome you all on behalf of CCC and also MSCC for this wonderful program. So let me not waste my time. I'll hand over the session back to Ankit so that the panelists are waiting, and you will also be eagerly waiting to know about today's topic. Thank you very much. Have a nice session. Thank you.
Thank you very much, Ram Kumar sir, for giving the brief about the activities which CCC has done in past and our future goals and objectives with the participants. Now, this webinar will have four speakers, and the webinar flow will be like this. We will be first getting the insights. What is ESG? Why ESG? Why it is applicable to your business? What regulations are available in market for ESG? What kind of implication will be having after implementing ESG or not implementing ESG? And the second speaker will speak about the available or the under development standards at the national level from BIS, Bureau of Indian Standards. And at the last, we will be having information from Mr. Bhaumik for the product lifecycle management. So in this flow, this webinar will be having in this 2 hours of time. So let me introduce our first speakers of the day. Miss Ashwini and Miss Tanushka. So I am sharing their introduction. So for first speaker, we have a team of two ladies from SDS, Miss Ashwini and Tanushka. So Ashwini is basically heading the sustainability and ESG division of SDS India, and she is a sustainability professional with rich and diverse experience. She heads the overall division of SDS for sustainability. Uh, Her expertise lies in identifying the pain points of the organization across the phases of sustainability journey and offering them with the solution. And she has helped companies with capacity building, development of sustainability reports, and assurance of sustainability. Her areas of expertise includes capacity building, that is GHG accounting and inventorization, sustainability report development, its rating support, supply chain in sustainability, green bond report development, ESG and sustainability strategy development, its ratings, and communication and branding of ESG and sustainability. So this is about Ms. Ashwini, and Tanushka is also helping Ashwini ji in global reporting frameworks, and she is also sustainability professional with extensive experience in strategy consulting and environment policy and advocacy. She has partnered with wide range of clients, including corporate clients, government agency, and the international institutes. She is well versed in developing comprehensive sustainability reports, goals, designing tailored solution that is aligning with industry specific requirements. She has guided many clients in carbon footprint reduction, energy adoption practices, supply chain sustainability, and social reporting. She has worked across 10 plus countries, strategically addressing various challenges in South Asian as well as African regions. And her areas of expertise includes net zero target setting, carbon footprint emission, and GHG accounting. She also have good competence in climate risk assessment, assessments of sustainability, its reporting, and human rights due diligence. So now I will directly hand over the session to Miss Ashwini. So I would request Ashwini ji to take this webinar or session with you and guide the participant about the ESG requirements. Thank you.
Thank you. Thank you so much, Ankit. Tanushka, would you like to share the screen? Till then, I'll just quickly, yeah. So thank you for that. Yeah. So I think, Tanushka, you can stay muted for, yeah. I'll just hand it over in a while to you, so you can. So firstly, let me thank CCC and MSCC for inviting us to conduct this session. As rightly mentioned, it's a very timely initiative, not just because there are regulations around it, but there are also a lot of different stakeholders talking about the subject. We'll talk about what stakeholders mean in the context of sustainability very soon. But I'll quickly take you through the agenda that we have, that we're planning to cover as a part of this conversation. So, yeah. So we're going to be talking about the concepts of sustainability and ESG. Very, very commonly, there is an interchange in the term sustainability and ESG. So we're going to try and explore if there really is an overlap. Are they the same things, or are they related, or are they completely different things? So that's something we'll dive into. We will then navigate the landscape of sustainability reporting also. What that means is what are the benefits and how sustainability reporting has evolved over the years. So this has been there for the last 3 decades or so. It has just become more mature and much more applicable now with the rising awareness. We will be discussing the sustainability reporting frameworks that are most commonly used. So frameworks that are used globally, and something that's happening in India also. There are a lot of developments happening in India. In the last, I think, last 5 years or so, we've seen a lot of uptake in the kind of demands that regulators are also making when it comes to sustainability disclosures. So we'll dive into that as well. So BRSR is something that we'll be talking about, the business responsibility and sustainability report. And ultimately, after we understand all of these frameworks, it's also very important to understand how to develop an impactful and a meaningful report, right? Something that will, represent a transparent and a balanced disclosure of your ES and G performance, which will enable any stakeholder to make an informed decision making. So that's something we'll dive into. But before we really get into these technicalities, it's important to understand why we are talking about the subject. So, yeah, right. So these images that you see on my screen, some of them are really daunting images. Some of them are something that we've experienced. Anybody who's stayed in Mumbai has experienced other floods. Even somebody who belongs to Chennai or regions that are prone to flooding understand the severity that comes with a flood, right? It's not just those 2 days, it's a traumatic experience. So that's one thing. We've all heard of heat waves. A lot of news in the last few years, we've been experiencing enhanced rates of heat waves. It's expected to go up only even more in the coming years. Air pollution, I think it's the season of air pollution. All across the country, in different cities, we are experiencing a bad air quality index. And climate crisis. So unfortunately, what we see is that there's a lot of bias when it comes to sustainability on climate and environment. A lot of organizations, individuals, and groups of people also assume that sustainability is environment only, right? But climate crisis is real. There's a lot of scientific study to back that up, that if we do not take right steps at this point in time, we are going to be facing devastating impacts. Recently, the United Nations also mentioned that the temperature of the earth is expected to go up by 3 degrees Celsius, which can have devastating impacts on life on land as well as in water across ecosystems, basically. But as I said, we tend to have a biased view when it comes to sustainability. We mostly focus on environmental parameters, but there's so much more to sustainability beyond environment only, right? Beyond climate. So there is human rights violations. There are geopolitical risks. We are all a witness to what's happening across the globe. We are watching, wars unravel across countries, and those have great impacts not just on society but also on environment to a great extent. There are a lot of economic inequities that we are experiencing. There is disparity when we look at this, and governance, of course, is the basic of everything, right? Any organization can thrive, any institution, any country can thrive only with good governance. And in the recent years, we have more than enough examples to demonstrate that failure to govern is actually failure to really have business continuity. We've seen banks collapse, we've seen startups collapse just because of poor governance practices. So all in all, this goes to emphasize that E, S, and G are not something that's good to have. It's something that's very, very important to be weaved into the fabric of how an organization really operates. And that's why we are talking about this. This is also backed by, Tanushka, if you can go ahead, please. Next slide. Yeah, so because there's so much curiosity, and this curiosity also comes up with a simple Google search. I've just put together an analytics that Google search shows that the increase in the searches with respect to ESG and sustainability, you can see them on your screen from 2018 to 2022. It has shot up, which only goes to say that people are more curious. They want to know more about the subject, and they're seeking guidance fervently when it comes to this topic. Also, a lot of newspapers, a lot of research goes on to say that ESG will continue to impact business in 2023 and going forward also, because we are seeing a lot of stakeholders participate in this conversation. And of course, there is a great potential for ESG related investing. One of the things that's very interesting here, you will see that 1 in 3 Gen Z workers reject jobs because of ESG values. Now, when I mentioned in the very beginning that we'll be talking about stakeholders in this context, what I meant is usually when we talk about stakeholders for a business, it is either your shareholder or your investor, right? But when we are talking about sustainability as the context in which a stakeholder is defined, it is any individual or group of individuals that can impact or be impacted by an organization's operations. So whether it's your employees, whether it's something as far-fetched as media, regulators, your supply chain partners, all of these are very, very key stakeholders to an organization in the sustainability context. So when we see that the future of the workforce is Gen Z, and they are becoming much more aware of sustainability, and they're looking at you from that perspective, that they will possibly consider a job opportunity only and only if you have the basic bare minimum in place. When you have consumers going out of their way to choose products that are greener, that are more sustainable, it only goes to show that this conversation is here to stay, and it's only going to go on to have a snowball effect and become much bigger in the future. Yeah. Moving on. Again, why are we talking about this? It's not just in terms of research and on books, it's also practically happening. There is increased investor and shareholder activism. So in my previous role, I've been associated with a bank and a large automotive company, the leading automotive company in India. What we would see is on a month-on-month basis, we would receive piles of questions from investors and shareholders on ESG particularly. They would ask us very pointed questions on what we are doing, not just within our operations, but also in our value chain. So how we were managing our financed emissions, how we were managing the human rights violations in the supply chain, if there were any. Were we even monitoring human rights as a parameter in our value chain? These were the kind of questions we were receiving from stakeholders. And the reason for this, again, is most of these big investors and shareholders, they're signatories to the UNPRI, United Nations Principles on Responsible Investment, which makes them accountable for the investments that they are making. And naturally, they come back to you as an organization to seek these responses, right? They have to ensure that their investments are much more greener, much more sustainable. Again, another thing that you must have all experienced and read is the greenwashing, green hushing, rainbow washing. To put it very simply, it's when an organization claims to do something but doesn't have enough evidence to back that up. Yeah, and there is increased scrutiny in this regard. So we are seeing that the European Union has actually, they're putting together a law and a mandate to ensure that greenwashing doesn't really happen. And we will soon see a lot of that coming to India also. Then moving on, as I mentioned partly in my first point, there is increased demand in ESG integration in the supply chain. So we see a lot of organizations also wanting their value chain to become more compliant. So with the carbon border adjustment mechanism, the CBAM, with the BRSR core, SEBI basically mandating that the value chain is a part of your entire ESG agenda. We are seeing a lot of this coming up because there are a lot of risks that may come up, not just in the operations, but in the value chain also. So there are so many different sectors wherein the value chain is a major contributor when it comes to carbon emissions, through scope 3 emissions. And that doesn't really get accounted for in many cases. So we see a lot of focus there. There are a lot of regulatory drivers. I always say this, that 2022 was a landmark year, especially for India, because we actually started to see a lot of regulations coming up, either for ES and G, right? Whether it's a green hydrogen policy, whether it's a sustainable finance and climate action related consultation paper that RBI launched. The SEBI launched something called a social stock exchange. They started pushing for green and blue bonds. So when we see all of this, we see that, again, a lot of evidence that not just from a perspective of good to have, but there are regulatory requirements coming up in this regard. And we have to be alert and have those implications taken into account. And ultimately, because of all of this, organizations are also becoming much more aware of the business continuity, reputation, and financial risks that may come up if ESG is not addressed. A very interesting graph that you will see on the right-hand side. This is from a publicly available source, basically. It's a research that they had performed. You may have heard of earnings transcripts, right? Whenever an organization is presenting their financial results, either at the end of the quarter or the end of the year, there is a transcript that is recorded. So you will see that the term ESG has shot up greatly in the last 2 decades. The one in yellow you will see that it has risen to a great extent. Just goes to show that there is again a lot of conversation on the subject in the investor community also, and it's here to stay. And ultimately, because of all of this, we see a lot of numbers in terms of uptake in the disclosures also. So Tanushka, if you could go to the next slide, which is going to be my last slide, is that there's an increasing demand for sustainability and ESG disclosures. So almost 96% of the world's largest 250 organizations have a sustainability report. Now, the frameworks that they use could be very different based on the geography that they belong to, who their key stakeholders are, what are the regulations in that area. So based on that, it may differ. The top 80% of the N100 companies are also having a sustainability report in some form or the other. It could be a standalone sustainability report. It could be an integrated report, so on and so forth. We are seeing that 44% of the global, basically countries across the globe have a mandate on sustainability reporting. India being one of them. We have a business responsibility and sustainability report mandate. It was called the BRR, which came out in 2012. And it has been greatly modified to suit the increasing demand in terms of sustainability disclosures for decision making. So that's one thing. We're also seeing that ESG investing is going to go up. So when we say ESG investing, it means that the investors will be looking at not just screening potential investments, but also ensuring that their existing investments are compliant with ESG related requirements. And of course, investment in ESG mandated assets is also going to go up. So by 2025, almost half of the professionally managed assets would have this ESG mandate. So all in all, to set the context, it's very clear that disclosures are going to be the way forward, because that is what will set the benchmark in terms of where we are, right? To really have a baseline, or to really put good initiatives in place, we need to have a baseline on where we are today. So a disclosure or a report is a great tool. Really, it's not really the end goal. It's a tool to really allow organizations to understand where they are and where they can go from there. With that context, I'm going to hand over to Tanushka, who's going to ably take you all through what are the frameworks and all of the other requirements, defining ESG and all of that. Over to you, Tanushka. Tanushka, you're muted.
Yeah, my bad. Yeah. Thank you, Ashwini. Thank you for setting up the context, that will help me for, participants to take deeper into different technical aspect, and more importantly, what are the relevant frameworks that they are looking for, how they are different, and how to choose. So, but before, going into that, I thought that I think Ankit was telling me that the cohort is quite diverse. There are people who are from, background who are already working into sustainability and ESG space, but then there are people who are new to the space or just entering into the space. So for the benefit of that, I'll, quickly take you through some of the basic concepts of sustainability and ESG. And then we will, delve into deeper aspects. So, the basic question, what is sustainability? There are so many definitions out there, but when it comes to sustainability in business, there are two things or two aspects which we address. One is the effect of business that has on the environment, and the effect that business has on society. So these are the two pillars that we build sustainability on. Now, to define it very simply, sustainability in business means whatever actions or strategies a business takes to either eliminate or to minimize, because many times it's not feasible to completely eliminate all the adverse impact, because the business needs to operate itself as well. So minimize the adverse environmental and social impacts that are caused by business operations. So this is, to simply put, this is a definition. Given this definition, the sustainable business strategies are very unique to the organization, because it ties into the larger business goals and values that our organization has. And it could be anything from, say, for example, for a manufacturing firm, it could be using sustainable material or procuring sustainable materials. It could also be, optimizing your supply chain. Ashwini spoke a lot about, how our market regulator is putting so much trust on integrating the supply chain into our sustainability disclosures. So maybe optimizing the supply chain, looking the avenues for reducing the greenhouse gas emissions. So that could be another priority for some organization. For some organization, the concern could be social areas where they are operating in. They might be impacting the community at large. How to engage with them? Should we reach them out? Should we help them with their education, health, and other necessities? Or for some organization, it could also be, providing the world-class benefits to their employees. So how to effectively engage with employees? How to devise the best employee well-being, criteria. So these are, some, what I'm trying to say here is that the sustainability is very unique to each organization, but said that there are certain standardized formats as well, which helps to set out those guidelines on what we are looking at when we say a sustainable business. Now is sustainability and ESG same? I mean, Ashwini already, talked about it, that we are using it quite synonymously these days. And time and again, we get this question that whether they are same, or is there a different sort of, there is some fundamental difference between two? So before clarifying that question, let me just take you through the definition of ESG. When we talk about ESG, to simply, put it together, it's a framework which help organization to manage the risk and opportunities around sustainability issues. Now, I'm sure that wouldn't have clarified your, concern a lot. But to understand ESG, we have to go back into how it was coined. And the ESG particularly term was coined in response to investors' need. So investors came up and said to companies that, see, sustainability is fine, but we want you to report or disclose your information to us on these specific parameters, that is environmental, social, and governance. And from there, ESG came into the picture. So sustainability has been around for, many decades now, but ESG has been, more into the picture in the past decade only. And it was in response to the investors' demand. So the fundamental difference between ESG and sustainability is that sustainability can mean a very different thing to different companies, and it's subjective in nature. While ESG is a framework, it provides you a very specific and measurable, KPIs that you can look into. Now, it could vary from industry to industry, but the overall framework remains the same, and organization have a visibility around that these are the parameters on which we need to report in. So these days, sustainability and ESG are used synonymously, but this is, a general difference. If it might come handy to you in later conversations. So you can see, when we talk about ESG, it's environmental, social, and governance. And the important pillars within environmental could be the issues related to water, your resource utilization, how effectively companies are managing their waste, energy optimization, emissions, and so on. Whereas if we talk about the social pillar, it talks about employee management, it talks about, supply chain issues, how organizations are reaching out to their communities, how they are impacting the community where they're operating in. And obviously, one of the important pillars is customers. So how organizations are engaging with their customers. And governance, I mean, Ashwini was already talking about it, is that less talked, but very important one is governance. So to understand that within organization, what is the composition, how inclusive is the organization, are they tracking the risk, how disclosures are happening, are they complying to the statutory requirements or not. So all these, concerns comes within the pillar of governance. Now, before, going into understanding that, okay, these are the sustainability and ESG, we set up a constant context around it. But the topic of today is sustainability or ESG reporting. And since, we have started using it synonymously, corporations are also using synonymously. So you will see sometimes, there is sustainability reporting, people are calling it ESG reporting as well. So let's go ahead with both of them, but ultimately the key pillars remains the same. And that is, the first one is stakeholders. So for any sustainability or ESG reporting, the key pillar is a stakeholder. Now, a stakeholder could vary based on the requirements and the demands that is coming in, but the fundamental requirement is to include the people, the stakeholders who are involved in operations of the organization, whether directly or indirectly. So we have to identify that to whom we are disclosing this information. What is the requirement? Are all those diverse expectations and voices are coming in while we are disclosing our information? So that is one of the very important pillar when we talk about the sustainability report. The second pillar is frameworks. So we will talk about it in detail in the further sections, but we have to decide which framework or guideline we are going to put in, because without it, the information will be scattered without any guideline. So whether we are going for GRI, whether we are going for BRSR or TCFD SASB, we have based on the requirement from your stakeholders, based on your objective of disclosure, you have to choose the right framework. And the third and the very important pillar is disclosure on material topics. Now, many of you would have already heard about materiality assessment. Some of you might already be working on it, have conducted assessments on that. So a very important and fundamental aspect into sustainability reporting is materiality assessment. That simply means that organizations have to pick the topics which are material to them, which means that the topics which are relevant to them and to their stakeholders as well. So there is a whole exercise where organization need to engage with their stakeholders, sort of understand that what are the key topics which are not only relevant to one stakeholder but all the stakeholders which are involved, and then assigning weightages and finalizing a list of material topics which will have the most impact on environmental and social issues. So that is what we call as material topic, and the process of arriving at material topics is called materiality assessment. Okay, so I think the last section was all about, just taking you quickly through the context setting. And now the landscape is essentially, we talked a lot about why we are talking and how the, demand generated. But a lot of time, the key question from the corporations are, what are the benefits that we get out of it? Okay, we need to disclose, okay, we need to communicate, but in general, apart from the investor demand, what are some of the benefits that we derive out of it? So let me take you quickly through some of the important benefits. There are, more number of benefits that one can arrive, and, it is unique to different organizations, but these are some of the key benefits which most of the organizations can derive out of sustainability reporting. So the first one is, enhanced reputation and credibility. We all know that if you're disclosing on, your information transparently, and to layer it up, you're also getting it assured by an independent third party. It really improves your investors' confidence, the credibility. Not only for investor, but also all the stakeholders, whether it is customer, your employees, the suppliers, and so on. So and also, it opens up the opportunity for you to have a lower cost capital, maybe increase access to capital, and better investment outcomes as well. Another important benefit that organization can derive is better risk management. And this is not talked enough, but let me tell you, it is very important. And this is where you can make a business case for adopting sustainability practices, because sustainability is not, good to do, well to do thing, but it provides you very tangible results in terms of cost efficiency, process optimization, and so on. So if we are talking, say, for example, if we are talking about supply chain, ESG or sustainability reporting provides you an opportunity to get to and to engage with your value chain. Try to understand where are the areas where your value chain might be suffering, and gives you opportunity to proactively work on it. So say if there are chances that your labor practices are not up to date, and there might be, probability of entering into a labor dispute, you would have opportunity to identify those risks beforehand and then mitigate it. So that not only, mitigate the issue, but also save cost. Another one is, resource efficiency. So while we're talking about E parameter of ESG, that is environmental performance, it gives you an opportunity to understand what are your emissions, what are your energy requirements, how can you minimize those emissions, how you can optimize your energy use, and all of those things not only result into the process efficiency, but also saving you cost. So this is, another very important benefit that sustainability reporting provides the opportunity for you to look into these areas and proactively work on it. A competitive advantage is obviously there, because if companies are proactively pursuing that, then you have that tangible, measurable ESG rating that help you, access various opportunities that might not be available to your competitors. As I think we were discussing in previous slides, that even it helps you to attract better workforce, specifically Gen Z millennials are looking into the organizations who have better practices. So all these things are very tangible benefits that organization can derive out of adopting sustainable practices and then transparently reporting on those. Okay, so this is, because we have been talking so much around sustainability and frameworks, but the journey is not very new. It has started way back. And this is, it's not a starting point 1992, but this is a very significant milestone. That's why I'm talking about it. This is even, it goes way back. But in 1992, after the deliberation in international summits such as UN Summit on Environment and Development that was held in Rio de Janeiro, also in Johannesburg in 2002. I mean, all these things led to adoption of what we call the United Nations Framework Convention on Climate Change, that is UNFCCC. Now, this paved the way for Kyoto Protocol, and more importantly, what we call as Global Reporting Initiative. So this is the most widely adopted reporting framework, and it sort of started working, or the consultation started in 1997. This was followed by Greenhouse Gas Protocol. Some of you who might be working into GHG space know already that Greenhouse Gas Protocol is sort of, standardized protocol that help you to identify how to calculate the GHG emission, and also provide the guidelines on mitigation as well. In 2000s, that decade, led to, and the next decade as well, many sustainability frameworks like Carbon Disclosure Project, SASB, and then in 2012, that was a landmark for India, because the SEBI, our market regulator, that is Security Exchange Board of India, they mandated the top 100 listed companies that by market capitalization to file for business responsibility report. So this was, you can say the start and the older version of what we call today as BRSR, that is business responsibility and sustainability reporting. So in 2012, it started with just 100 listed firms, but then gradually, more companies were brought into the purview. And in 2021, after multiple revisions, consultations, what we got, the new version of BRR, that is BRSR. In past 1 year, there has been so many modifications. In March, SEBI brought in a consultation paper. Then there were subsequent deliberations. And in last, 5-6 months, there have been multiple revisions and new things were brought in BRSR. So in 2023 itself, BRSR is now mandated for top 1,000 listed companies. And there is something else which has been brought into the picture, that is called BRSR code. So people who might be already working into the space, they know that how much emphasis on BRSR code there is, not only on disclosure, but also on assurance. So I'll talk a bit more about it just to give you a sense on what are the developments in later slides. But yeah, this is how, sustainability space itself has evolved and specifically reporting. So moving on to the sustainability reporting frameworks, which is, the key topic for our today's discussion. But, coming to this, that context setting was very important. Otherwise, it would not make much sense to directly speak about this. Okay, so reporting frameworks. I have picked up, some of the most widely utilized reporting frameworks, starting with GRI. So GRI is, most widely recognized framework for sustainability reporting, and it is applicable to all sectors. So that is, the two most important things. What makes GRI so popular is, one is obviously it is applicable to all sectors, and another is its flexibility that it offers. So though there are reporting principles, there are guidelines, there are, materiality assessment methodology that is there in GRI, but it also provides organizations flexibility to report on certain issues, and it doesn't provide a very structured format that you have to fill in. So that flexibility, helps a lot of organization to provide information which they are reporting on right now, and maybe as they go on, they can keep including more criteria and KPIs. So GRI, very important thing that GRI brought in was the concept of materiality. That started from GRI itself, and is still, the most adopted method for materiality assessment is what GRI proposes, and most of the reporting framework is still utilize that guideline on how to assess the material issues for the organization, how to assign weightages, and other aspects as well. The another important reporting framework is integrated reporting. And how is it different is that it integrates both financial and non-financial information. So both the financial disclosure and non-financial disclosure is within one report. You can say that annual report plus sustainability report constitutes integrated reporting. And, it primarily, most of the companies who have very significant impact in terms of environmental and social, areas, they go for the integrated reporting. It also is very important to understand that integrated reporting is based on value creation model. And when we talk about value creation model, that means it includes both financial and non-financial. And it is based on 6 very important, capitals that integrated reporting talk about. And will not go into much depth because, we have limited time, but let me just, spell it out for you. What are the important capitals that we talk about, and you can look it up later. And one is obviously intellectual capital. We talk a lot about it around knowledge. Human capital is another important parameter. Financial capital is a part of IR. We talk about natural capital, environmental resources, and so on. And then obviously the social and relationship capital that organizations build in. So all these, capital put together forms integrated reporting foundation. Another, value creation model based sustainability framework is SASB. And how SASB is unique that it provides industry specific, sustainability disclosure. So that means is that one standard is not applicable to all, but SASB come up with a very specific standard requirements and framework for each of the industries. And they have a specific standard for 77 industries, which they have further categorized into 11 subcategories or the broader group. So that's how it's different, because it provides the industries to pick and identify very crucial, areas, and sort of help to identify what are the financial material issues for those industries. So in that way, SSB is unique. If organizations want to report on the financially material issues for them, and also want to go for a standard which provides a very specific industry related guidelines, the SASB is the way to go. Another widely used, framework is Carbon Disclosure Project, that is CDP. So CDP is an international non-profit organization, and the focus here, and how is it different from, say, GRI or SASB, is that in these frameworks, or for that matter IR as well, that they are directly released to the users, whosoever it is. But for CDP, the survey or the questionnaire is submitted to CDP, and then in turn CDP, what it does is it generates a score. It generates a score, and the focus of CDP is on specifically on climate change. It does not talk about the other range of sustainability issues that GRI, IR, and SASB talk about, but it only focus on climate change issues, and specifically, water and your forest biodiversity. So these are the issues where CDP asks the organizations to report on, and very unique characteristic that CDP is that it also, it's a disclosure, but it also sort of rating in nature, because it scores organization from grade A to D, and that helps, any stakeholder to readily compare between two organizations, how they are performing in terms of their climate disclosures, climate change performance when it comes to CDP. And also, at the end, it's available for public scrutiny for publishing. So stakeholders can readily access it after, the CDP has reviewed it and scored it. So that way, CDP provides a unique opportunity for stakeholders to compare the performance on climate change. Coming on to TCFD. TCFD is another global framework which is unique in terms of that it provides the opportunity for organization to sort of monetize what are the risks related to climate change. So it tries to understand that what are the financial implications of climate risk when it comes to organization. So, it would go into understanding that what are the climate risks, how do we analyze the scenario, what are the specific considerations. And that's how it sort of merge both financial and non-financial disclosure, but stick to the climate change issues and try to give it a monetary number. Now coming to, our Indian version of business responsibility and sustainability reporting, that is BRSR. It is, I think all of us by now have heard about it in some, capacity. Some of you have already reported on it. So I'll be happy to take on questions later. But let me take you through briefly around BRSR as well, because that is our own Indian version, rest are all global framework. And SEBI came up with it. And as I talked earlier that, from 2012 to 2021, BRR evolved and became BRSR. And it has primarily 9 principles which were, leveraged from National Guidelines on Responsible Business Conduct, that is NGBRC. Now our BRSR has primarily 2 sort of indicators, if you say. One is essential indicators and another is leadership indicators. So leadership indicators are voluntary in nature for now, though SEBI is still, deliberating if they want to, make these indicators as well into essential category. But for now, the questions related to value chain and some other questions around scope 3 emissions, they are categorized into voluntary, and organization may choose to report on it or not, but those are not, essential in nature. So you can see, I have listed down, the 9 principles, a summary of 9 principles, which is there, So it ranges from ethical business practices to sustainable sourcing of product, to understand how well organizations are maintaining their employee well-being, stakeholder engagement, issues of human rights, health and safety. Obviously, environmental performance is very important. How equal opportunity and equal growth is there. So all these, and ultimately the customer engagement, how transparently they are engaging with customers. So all these considerations comes within BRSR. And the very recent development that happened in August is the BRSR code. So in August, SEBI came up with BRSR code, which is, you can say, it's a subset of BRSR. And it has 22. So SEBI has identified 22 KPIs and also included some of other, nuances as well in that. And now organizations are mandated to report on these BRSR codes. So initially, top 1,000 listed companies were reporting on BRSR, right? Now, top 1,000 listed companies from this financial year are mandated to report on BRSR code. And not only that, there are so many other developments that have come in. For example, top 250 companies needs to also, include their value chain in disclosure. So top 1,000 companies need to disclose on BRSR code, but top 250 companies also needs to disclose on their value chain from the next financial year. Also, I was talking about assurance. So SEBI has now putting a lot of focus on assurance because we have a risk of greenwashing, misquoting the information, exaggerating the initiatives that are being taken. So to ensure that all the information that is coming in is transparent and credible, SEBI is now mandating from this financial year only that top 150 firms out of this 1,000 firms have to also go through a BRSR core assurance, that too at the reasonable engagement level. Now the assurance is another area, and that is out of scope of the current discussion that we are having. But people who are already engaged in such work, they already know that what assurance is and what is reasonable, what is limited level of assurance. So reasonable is, in simple terms, is a higher level of assurance or higher level of verification that you do. And 150 firms are from this financial year only mandated to take it up. So subsequently in 25-26 also, value chain partners are also will be mandated to take up assurance in limited manner. So these are all developments that are coming in, and you can see that requirements will become only stricter and stricter, and organization need to prepare beforehand because they are implementing it in phased manner. So first 250 companies will come in, and then maybe 1,000, and then further even more companies will brought in under the umbrella of mandatory requirement. So more proactive organizations they can readily prepare, because it's the disclosure is just the end goal. The journey needs to start beforehand so that you have information that you can disclose on, you have initiatives, you have work that is put in towards making your business sustainable that you can disclose to your stakeholders. So this is it. Now these are two another frameworks, these are globally used, not much used. I mean, these are recent developments, but I thought, maybe you might be interested. You might have heard these because these were in, all over news and articles. So CSRD and IFRS, without wasting much time, I'll just quickly take you through. So Corporate Sustainability Reporting Directive, that is CSRD. It is specifically for the EU businesses. It's also a revised version of the initial framework that was being used in EU. And it is not only for the EU businesses, but also for the subsidiaries which are there in EU. So say parent company might be in some other country, but the subsidiary is there, then also you have to disclose. So that way it might impact companies which are in other regions and countries as well. A very distinct thing for CSRD is that there is a concept of double materiality that is introduced there, which was already there, but most of the framework were not mandating it for now, but CSRD does that. And what it means is that organization does not only have to disclose how their businesses are affecting the planet and people at large, but also, they have to assess how the sustainability goals or measures or the risk that is associated can also help the financial health of their business. So both of the concepts, that some of the frameworks had one thing, some of the frameworks had another thing, but these both concepts have brought in together in CSRD, and that is the unique feature of CSRD as well. Coming on to IFRS, that is the International Financial Reporting Standards. So IFRS is a well-known name in terms of, and widely used one in terms of financial reporting. But recently they, the IFRS Foundation established International Sustainability Standard Board. That has in turn developed, sustainability disclosure standards as well. So there are two standards here. One is IFRS S1 and another is S2. And how they are different is, one is addressing a wide range of sustainability related issues. Another is focused on climate change only. So just like, the say TCFD or CDP is focused on climate change, similarly IFRS S2 is focused on climate change only. And it is highly leveraged from TCFD as well. So, whether we talk about the key 4 parameters, that is governance, strategy, risk management, or metrics and targets, all these things are the part of IFRS as well. So, I mean, I can understand for someone who is just entering into the space, this might be a lot of information, but this is just, tip of the iceberg. So this will just, provide you opportunity to go further, read up and try to understand what are the different nuances of these frameworks. Now, the last bit of, from my end is just to help you out with how you can develop an effective report. Though there are different frameworks, different guidelines, and there will be unique way of organization to put out the, information. But still there are certain good practices that organization can adopt, and there are certain steps then that they can take that makes their report more effective and more, palatable for the stakeholders. So at SGS, what we do is we start with capacity building. So because it's very important for most of the organizations who are at very early stage of their maturity, there is not enough sensitization or awareness around what ESG is, what sustainability is, why is it important, why we are doing this whole exercise, what is the need, our operations are going fine already. So, to bring everyone on same page, to create that awareness, the sensitization, we conduct a capacity building exercise, which, set the platform for all the other engagements that happen later. As we were discussing, that materiality assessment and stakeholder engagement is a very important pillar for ESG reporting process. So followed by that, the next step that organizations should take is to, identify what are the relevant material topics for them, and then, focus and streamline on those particular issues. Followed by that, once you have identified the material issues, the work doesn't end here, because you have to break it down into key performance goals and indicators, because material topics will be the wider issue, but then you have to bring it down to, the actionable points, how you can break it down into different indicators. Say environmental performance, energy could be larger one, but then you have to break it down into energy intensity, efficiency, and so on. So organizations do that. That is, followed by most of the time strategy works with that happens, because I was already, talking about that. It's the end product, but it's not the end goal, as Ashwini was saying. So after you have put in all this work, these building blocks that I'm talking about, then only you can create an effective sustainability or ESG report. So once you have identified your KPIs, what you have to do, you have to devise a roadmap or a strategy on how to work on them. If you are saying that, say, emissions or energy is your issue, your emissions are way too high, or your energy efficiency is not good, then what are the key areas where you can work in? Do you need to switch to renewable energy? Do you need to cut down in certain areas? So all those strategy, whether it is related to even social issues, your employee well-being is not performing that good. So what are the key steps that you have to take in? So all those considerations need to bring in, and you have to devise a roadmap along with your targets and timelines. And then you have to, constantly monitor it. And after all this work that comes together, that comes at the end in form of your report. So what work you have done, what was your strategy, where do you stand right now, what are your future plans, how you intend to bring it down, what are some of the key innovations that you have bring into your organization. So all that goes into your disclosure. But before that, these steps need to be followed for a good report. At last, I would just leave you with, some do's and developing, or you can say how to develop an impactful report. And with years of experience, we have identified that obviously materiality assessment is a very important one. An ESG strategy you need to have in place so that you are constantly working towards achieving your target. But also very important to, identify appropriate reporting framework. Time and again, we have talked about it that you have to understand that what is the specific requirement that is coming in. Is it investor centric? Then you have to go for SASB. Are you creating it for a wider audience? You want a flexibility, then you should go for GRI. Are you focused on climate change? Then you should go for CDP. If your aim is to sort of understand the financial implication of climate change, then go for TCFD. So you have to identify your stakeholders and also the purpose of disclosure, and based on that, you have to very carefully select the framework. Very important one is don't overclaim, because that is the biggest risk when it comes to disclosure, that put together a realistic picture. It's a work in progress for all the organizations. The important thing is that you are working towards it, but don't overclaim. Try to put as much as quantitative information that is there, because obviously you will put together case studies, some of the anecdotes, but if you have a figure to substantiate it, nothing like that, because that adds that credibility to your claims. And obviously, because reports like GRI, IR, and for that matter, SESB, they are so long. So it's very important to highlight key aspect. What do you want to communicate to your, stakeholder? If there is a certain very specific area which you want to highlight, then do highlight it in a manner that is very palatable for the reader. So, I mean, yeah, from my side, these are, some of the areas which I leave with you. This is a very broad topic. We have just, sort of touched all the aspects. But yeah, happy to take few questions at the end as well. So thank you.
Thank you, Tanushka. Well done. Ankit, I believe you muted in case you're trying to speak.
Thank you very much, Ashwini and Tanushka, for taking through the journey of ESG. What is ESG? Why it is required? The evaluation of the reporting frameworks, sustainability, and lastly, the reporting frameworks, and ultimately where it is applicable, which framework you can choose. Obviously, our participant will be having many questions, so we will be taking questions at the end of the session. So now I would request our next speaker, Mr. Anuj Bhatnagar. So I will briefly introduce him, and then he will communicate, he will deliver the session about the BIS on sustainability. So Mr. Anuj Bhatnagar, basically he is the scientist at Bureau of Indian Standards, our national standard body, and he is having rich experience of more than 34 years. He was and he is involved in the standards formulation, certification, auditing, and laboratory management of the laboratories of Bureau of Indian Standards. He is very skilled quality system expert and faculty with extensive experience in quality management, auditing, and especially coaching the professionals. He has audited many organizations as per ISO 9001, that is the QMS, and ISO IEC 17025, the accreditation standard for the laboratories. He has authored many papers related to management systems. He has also authored a book called Measurements and Laboratory System, a comprehensive guide, and he has developed a criteria for variation in inter-lab QA test. So I will request now Mr. Amit Bhatnagar to take the charge of session. Over to you, sir.
Yeah, thank you very much, Ankit. I'll just share my screen.
Yeah.
My presentation here. Is it visible?
Yes, sir.
Okay. So in last session, we heard Tanushka and her office mate from SGS about telling about the sustainable reporting standards in detail. So I'll be talking about the reporting standards, national standards, what BIS is doing in that direction and what we have done. I am from Bureau of Indian Standards, so I'll be mainly discussing about the national standards. You know, national standards are basically those standards which BIS make and notifies. Even say Haldiram can make a standard for bhujia. Bikano can make a standard on bhujia, but they don't become the national standards.
Yes.
They can become a national standard when BIS notifies that standard. So the difference between national standards and other standards is this. So there are many organizations they are making standards on sustainability reporting. Last session we saw that there are n number of organizations and SEBI guidelines, they don't stop the companies to follow any of these frameworks or standards. Anybody can follow any standards and declare it, their sustainability reporting. So there is no stopping from the regulator side. Now, but in a nation, a national standard should prevail. So what we are doing in that direction? So we have to discuss about that. Now, in this era of conformity assessment, when we say that national standards have to be verified or it has to be validated, it has to be certified. So it comes in the realm of conformity assessment. And conformity assessment, when this kind of system or a process that is demonstrated to follow certain requirements, that requirements are given in the standards. So this conformity assessment requirements given in Indian standards in the case of sustainable reporting is what we are going to discuss. So for any kind of standard making or regulations making or any kind of requirements we want to decide, we have to see whether we have that framework available in the country or not. If we have the framework, then we can go ahead. If we don't have the framework, then we have to first establish the framework. In India, luckily, the framework is already available. Regulators are there. SEBI is there. Then ministries also, they act as regulator by giving out acts and other things. Then there are implementers, the organizations who are going to implement what is written in the regulations. Then there are standards. So all three, when they combine, they create a framework for reporting of the any kind of sustainability reporting. So what is the flow of sustainability reporting? If I have to see the flow of the sustainability reporting, it is first is regulations and directives. They are the implementing agencies. The implementing entity or the organization can directly implement. There is no need for any kind of further enforcement on that. The implementing agency or the organization can directly adopt them and implement it. Now, for ESG reporting, the rating agencies are to be there, which SEBI has mandated, and the rating agencies have to provide the rating services. That rating services will rate the how much they have the organizations have implemented. So then comes the assurance engagement. The verification agencies can verify what sustainability reporting is actually, what claim has been made by the company. So another flow is this: there are standards, there are entities who implement the standards, then there are verifier raters, which will rate the claim of the entity, and they will report in a form of opinion. This is another flow of sustainability reporting. We are basically going to work in this flow. So I'll be telling what actually are verifiers, how the verification is done, a small touching upon the subject of verification and what are the standards available for this. Now, this is what work is being done currently. Now, when we talk about this conformity assessment, it flows through the international body, that is International Accreditation Forum. They have accredited accreditation body. Say it is NABCB in India, that is already accredited, and it is signatory to IAF through MLA. That is as per ISO 17011. That accreditation body NABCB then accredit any conformity assessment body. Conformity assessment body is a body which will further do the conformity assessment of the organization. So the conformity assessment bodies are accredited as per ISO 17029. This is the standard for verification and validation agencies. Now these agencies, conformity assessment body, these agencies are going to validate and verify the claim of the companies which have been declared by the companies which has been declared by the companies. So the standard for those verification and validation is ISO 14019, part 1, 2, and 3. All these standards are currently in the making. These are not finalized standards. These are in the process of finalization. And ISO is going very speedily in finalizing. Probably by next year, these standards will be finalized. Then these standards after finalization can be adopted as a national standard. So this is what the process is going to be there for conformity assessment in sustainable reporting. So these are the standards which are there, international or Indian standards already, which are there and can be used. This is ISO 14065 2020, which are general principles and requirements for bodies validating and verifying environmental information. This is for only environmental information. Then ISO 14064 part 2. This is for greenhouse gases. Then ISO 17000 is vocabulary for conformity assessment. Then ISO PWI is 37010. This is for governance of organization, the general principle for ESG disclosure. So these are the standards which are already available. Then there is technical standard of ISO 17033. That is for ethical claims and supporting information, principles and requirements. These all standards are ISO standard yet to be adopted by India. So these are in the process of adoption. Now these are ISO 14050 that is environment management vocabulary. This has already been adopted by India. Then ISO 31000, that is risk management guidelines. This has been adopted by India. Then ISO 37000, governance for organization guidelines, also adopted. Then Indian Standard 26001, that is for corporate social responsibility. Now, this is what I always say, from where the money will come to for spending in the sustainability reporting or taking care of sustainability. It will come from corporate social responsibility. So we have already finalized one standard, which is a beautiful standard for corporate social responsibility. Then there are another series of standard 26002, that is for conducting assurance engagement. So this is series of standard is already available for conducting assurance engagement. Then IEC 17011, this is conformity assessment for requirements for accreditation body, which I told you that IAF has accredited our NABCB as per this standard. Then 17029 is conformity assessment, general principles and requirements for validation and verification bodies. Then next three standards are under preparation. ISO 14019 Part 1, Part 2, Part 3. This is validation and verification of sustainability information, general principles and requirements. Second is verification process, and third is the validation process. Now, Part 1 and Part 2 have been partly made, so but Part 3 is yet to be made. So I can just throw a light what is there given in the Part 2, Part 1. So if we going to talk about what is validation and verification, basically the difference in these two terms is that validation is confirmation of claim which has already been made by the organization, whereas validation is which is for future, for projected outcome, whereas verification is the confirmation of claim which has already been made by the organization. So this is the difference. Yeah, future claim and the current claim. So this is the conformity assessment process where entity that takes action on the claim, and that can be used as per CSR standard 26001, and then a claim is established, and for establishing that claim, any consultancy or any organization or somebody in the company can take care of that. Then validation or verification of the claim can be done by validator or verifier. Then assurance of the claim. Assure the claim again can be done by validator and verifier. These validator and verifiers are accredited. So these are accredited as per 17029. So, and after that, the validator and verifier will issue the statement. So this is the conformity assessment process that goes there. Now, this is the verification process I was talking about. It starts with pre-engagement with client. So the verifier, what they have to do, verifier will first go to the step of pre-engagement where they will define what is the objective, what kind of deliverable will be there. So in deliverable, a statement is to be given, or a report is to be given, or findings in what form is to be given, is to be decided. Then verification pro forma, what kind of criteria shall be there is to be decided, and what materiality shall be there, what is the level of assurance, limitation is, what are the limitation in achieving that level of assurance, and what is the conformity of scope. Finally, the conformity of scope is done with the client, whether they agree to it or not. So this is the pre-engagement side. Then comes the engagement where verification program is executed, scope is seen, and relevant requirement by verification and validation body or verifier is seen. Then statement that the client is responsible for the claim. It is very important, and it is written in the standard clearly that client shall be responsible for the claim, whatever claim is made by the client. Client means it is the responsible party, or the you can say the organization which is making the claim, that is the client. So next step comes the planning. In planning, the team selection, verification activities and methodology along with the team. Then a strategic analysis, what kind of analysis will be there, what is the risk assessment in conducting the verification, then how the evidence gathering activities will be there, what kind of evidence will be there, then verification plan has to be prepared, then evidence gathering plan has to be prepared, then scope limitation, if there any kind of limitation in the scope is to be seen, and then it is to be approved. Everything has to be approved from the client, because it is the client who is going to supply you the paraphernalia, or the supply the verifier the paraphernalia, or all support for conducting the verification. So after that, it is execution, and after execution, it is review, decision, and verification statement. This is the end of the verification process. So this verification, once done, can be repeated. But if for the same claim, if claim is changed by the client, yes, it is repeated again. Now, in this also, we have observed in BIS there are certain gap areas, and what these are the standards about how the organization or the company will disclose. So we are making around 18 standards that has been proposed by BIS. We are preparing for that, and all standards and ESG issues. These 18 standards are for disclosure, and these standards cover this declaration and verification requirements of ESG performance. And these standards, there are 5 numbers of standards are for environment, 4 are for social factors, 2 standards related to the governance, and rest of the standards related to disclosures. So this is how we are going to work. And this 14019 part 1, part 2, part 3, this standard is being worked by BIS in association with ISO. BIS is also a part of the ISO committee, that is ISO Technical Committee 207 SC2 Joint Working Group 6. So this is the committee which is making these standards, and BIS is part of that. Then there is another committee working on sustainability management system standards, which will establish the sustainability management system. So this is Technical Committee 343, and near future, one may see the sustainability management system standard also coming. So this is the development at ISO level, where CASCO and Technical Committee 207 are making 14019 series of standard, which will provide a base to validate or verify. So this is what will be there. And this I have already told that Technical Committee 343 is going to make management system standard, type A management system standards for sustainability management system. So it will ease the companies in managing sustainability related aspects in their company. Now, what we are doing in BIS, I told about 18 standards which we are making. There is a committee in Management and System Department, that is MSD 10, where we have established a subcommittee on ESG in that, and there are 11 working groups which are looking after the 18 standards. So this is the basis for disclosure in BIS. These are the working groups, and these are the topics on which we are working. So the national standards body will make these standards in ESG disclosure requirements, and this topic, the work has already been started, and probably within a year or so the standards will be ready. So these are all 11 working groups on which we are working. So this was all from my side. Thank you, and I'll be happy to take any questions regarding it. Thank you very much.
Yeah, thank you very much, sir, for guiding us about what BIS is doing in perspective of ESG, and the process of verification, validation, starting from the IAF, AB, CB, and till the customer. So it was very insightful session, and also I could heard the word IS 26000 is a beautiful standard. So it is about the corporate social responsibility. So thank you very much, sir. Thank you very much for your time. So if any question is there,
Ankit, I'm sorry for disruption. I'm down with fever, but since I agreed for this, so I came here.
Yes,
so
yes.
Sorry for the disruption. Okay.
No worries, sir. We can understand. So thank you very much, sir. Even if in such condition you could deliver the session and kept your promise. Thank you very much, sir.
Thank you very much, sir. Very much, sir.
Now our next speaker is Mr. Bhaumik Amin. So I will introduce briefly about himself, and we will be learning about the product lifecycle assessment. So Mr. Bhaumik Amin is Director of EHS, that is Environment, Health, Safety and Sustainability. And now basically he is stationed at California, USA. And he is a certified safety professional, certified sustainability practitioner with a diploma in process safety management and a passion for proactive and collaborative EHS and S solution. He has over 12 years of experience in leading the global EHS and sustainability team across the multiple sites of Morgan Advanced Materials. He is core competent in developing and implementing EHS and SS frameworks, management system, ensuring compliance and consistency at various sites, reducing waste, environmental impact, and driving EHS and S excellence. The significant achievements what he has made is a reduction in lost time accident rates from 0.57 to 0.22 and achieving 2.5 million safe man hours goal 3 times. He has also reduced the total power consumption by 23% and 26% at water stress site for thermal ceramic business of Morgan Advanced Materials, with considering the baseline of year 2015. And we would also like to once again thanks because Mr. Bhaumik is having the time zone where he is speaking at midnight around 1 or 1:30 a.m. at USA. So thank you very much, Mr. Bhaumik. And now over to you. You can share your slide and present. Thank you.
Thank you. I hope I'm audible.
Yeah.
Thank you. And my slide is visible to you guys?
Visible.
Thank you. Greetings of the day. I think I'm very passionate to cascade the learnings that I have got through my academics and professional expertise in the field of ESG. We started working in past 2020 onwards on the ESG journey, and we had great success on this. I'll just give a snapshot about the product lifecycle as one of the element that has been the topic today. Before I start, I would like to just set up an agenda. We will talk about some sustainability share, the product lifecycle assessment introductions, basic standards, and details about the product category rules and environment product declarations. And ultimately, we'll end up in discussions about how it benefits to the organization. So as we discussed earlier from Ankita's and Tanushka's presentations, we just refine the definition that we use it. The concept of sustainability is about meeting the current needs without compromising the ability of future generations to meet their own. So that's the definition that we adopted. Ultimately, it helps us to improve the bottom line, wherein we are all into business and we want to make profits, and not at the cost of the environment impact or other social governance impacts. So ultimately, sustainability helps in the bottom line. It drives innovation because it gives today's world is a VUCA world. And if we don't work out with innovations, we are nowhere in the business. It gives value additions to the stakeholders, investors, and gain confidence on the business about the journey of ESG roadmaps. It is a moral responsibility for the future generations, the children that are coming, and they have a lot of things and challenges in this world. And finally, it also in the compliance with Paris Agreement, which was COP21. Apart from that, this helps to save money. Sustainability also helps to measure the ecological footprint of the product, which I'm talking about now. Implementing a benchmarking between the sites and sustainable practices, the sources, venues, and local partners. How can we imbibe all this together to help us to lead this journey? Because we have to take everybody on the board here before moving into the direction. And ultimately, how the sustainable events that give back to the community about the benefits that they have reaped through this business. Now, I'm just giving you a nutshell about what life cycle assessment means. The life cycle assessment is a stage of raw material when the raw material is abstracted. Example I'm taking up as a miner. a farm where cotton is being taken up, and the growth of that cotton is happening in the farm where we are taking. I'm going to give you an example of of jeans, which is being manufactured. So when the cotton is being reaped in the farms and how it is being taken up, what are the areas and how does it increases the carbon emissions from that stage to the development stage in the manufacturing, and then shipping it to the customer location at the shopping malls and areas. So every stage of that product will have a carbon emission impacted. I'm just giving here an example. Extraction, there we are doing taking out water using the carbon emissions. Processing that processing the raw materials in the manufacturing areas, we are utilizing energy, water, waste, and many other components there. We are designing those things for the buildings. We are processing those products and sending it to different customers. The again distribution component will have the carbon emissions. During that, there will be also having the resources, natural resources like the fuel, energy, water, etc. And in that also we will be generating certain waste components which will be either disposed of or either recycled back to the system in the manufacturing. And after that, the end users who are using it and passing it, and finally their consumers will be disposing that product which is being used. So this is every stage of this production of if this product goes through has a component of global warming potentials. There are different elements of global warming potentials, and this is what been figured out in the life cycle assessments. I'll take it in a nutshell in a case study in the back of the slides here. But before I move, this is the basic synopsis of how a life cycle assessment is carried out. There are three types of life cycle assessment. One is a cradle to gate, which is from the raw materials to the production areas at the factory gate. That's the cradle to gate approach. A cradle means like an area where we are just having that particular warmth of how the process is being carried out for that product. The next stage is cradle to grave, wherein the product is being manufactured, shipped to the customers. The customer have its own usages, and during that usages, they also use their own maintenance, repairs, or replacement or refurbishment of the product, and they also use energy and water. Each stage will consume or emit carbon emissions, global warming potentials, and there are different categories that I will make it up. And finally, that product will be disposed of either in the landfill, waste processing. We will be also transporting our waste from our factories to the end recyclers or maybe a TSDF site. So that's something which is cradle to grave approach. The last one is a cradle to cradle approach. I will just give you an example here, cradle to cradle, where in a product, I used to have a microporous component in my past organization. We used to take the raw materials from the mining sectors. That emits a carbon emission potentials. It's being supplied to the factories where processing happens in the raw material areas. Again, shipping has the component. The transportation is another area where we are having the carbon emission potential. But that raw material is being processed at the contractor or the subcontractor site. Again, that emits a carbon emissions. When it is being done, it is as a raw material, it is shipped to the manufacturing site. And again, our manufacturing site will be having generating carbon emissions, water, waste generations. So those things will be produced. After that product has been produced, it is going to the customer location. A customer processes it again and finally fine tunes it. And finally, end of the life, the customer will give it back to the manufacturer so that it can be co-processed. So that is something what cradle to cradle approach. So it's like a recycling system. We can see the last component is reuse, recovery, recycling potential here. So this is the basic structure, and each of these areas will have a lot of details data will be required. How the life cycle assessment is carried out, I will just give you an example. Well, we need to take out the data from the system and take it out from, and we'll have to use a software. Probably these softwares are available I don't want to promote anyone, but then there are a lot of such softwares where data will be fed up at A1 to A3 stage, A4 to A5 stage, and based on the guidelines that the organization wants to commit for. So every stage will have this details generated coming out as a result, and that life cycle assessment will be detailed report. This report will be submitted to the customers. Now I'm coming, why do we need this project? This is an example how a jeans will emit a carbon emission of one pair of jeans that we buy from a shopping mall or a shop, what carbon emission potential it will emit. So there's a cotton production. For the cotton production, there is a water which is going to the fields. There's an energy which is being used to pluck the cotton, process it at that stage in the farm. From that area, from the farm, it is being processed to the raw materials supply areas. So that fabric production area will be using again energy, and during that from farm to the fabrication production, that area will again have the transportation component. After that, the garment will be manufactured. Again, component of global warming potential is there. Transportation and distribution happens at the different stages. And again, that is a component of carbon emissions. The consumer takes it from the shop and use it. It has a component when we recycle, reuse, or wash it up also on a regular basis. Our own component of carbon emission is being also generated there at the consumer point. And finally, sometimes like big brands have a tendency that they will take back the used cloths, will give you some rebate. And today in the world, a lot of niche brands are using these facilities of recycling and reprocessing those used cotton products. They will process it, so that will reduce their impact on the global warming potential, and you will be able to contribute that way by recycling directly to the products. Finally, if it doesn't get up there, it will have an end life, which will be going to a landfill or appropriate disposal facilities. Each stage its own have a carbon emission potential. So for example, I've just taken where a raw material production happens, natural fibers, synthetic materials are being processed, chemicals are being added. Now that chemicals, again, we are procuring from certain suppliers. So those suppliers will also have a component on that particular emission potentials. There will be fossil fuels, there will be renewable energy sources. If you not everybody has that quantity of renewable energies in this world. And after that, we are doing extrusions, spinning, weaving, dyeing, finishing. Each stage of that product process will also have a carbon emission potentials. Moving to apparel productions, there are a lot of process that garment is being processed. So again, each component will have a quantity of carbon emission potentials. Finally, all these chemicals, fertilizers, all those things will be added up in the system, and it has a component. Each chemical itself is having a potential of carbon emissions. So that database, we called it EcoInvent 3.6 database. It has been upgraded, if I'm not wrong, to 3.8 now. So each of that database is available in that softwares, and you can take those details for any chemicals that is available in the world based on CAS number, chemical abstract series numbers, or other potentials from the different LCAs that has been globally completed by certain customers. So these products, these chemicals also will have those components. Even water, when we're abstracting water, we are using energy from ground or either from pumping it. So that component will also have that carbon emission potentials. So finally, it been packed up. Packaging will again have a carbon emission potential because we are procuring packaging materials from different suppliers, and there are different grades of packaging, wood, paper, plastics, and all. So different areas will be having those carbon emission potentials. The retail sectors will be having their own energy because they are supplying air conditioning systems in the shops and all, lighting arrangements and all those things. So those components will also have that. Labor and travels. We all commute from our factories to work and work to home and all. So those things also taken into examples of the carbon emissions. The usage phase, as I said, when we are processing it, daily washing it at our sites, at our home, there's a component of carbon emission going up. So there all things are calculated, and then finally these things goes to final value figures. The entire one product of jeans will have a climate change of 33.4 kilogram of carbon equivalent. So this is equivalent to a 69 miles an average US car drives, or a 246 hours of TV that has been used. So this is how it generates the report. I've just given a small summary, but the reports are quite detailed enough. The water consumed is about 3,781 liters. Now, why do we do this? Customers, and there is a regulations almost in my part of the world here, 2024, every product which has been coming to this part of this world will have a carbon emission potential printed on it. So that's something we do. The customers are requirement on this kind of things, because they will be using in the systems and uploading into their compliances. The stakeholders need it. There is a need for publicizing this. The reason is that it seems like previously what SGS team has told us, they have a reporting guidelines. So these helps us to benchmark it. This also helps us to reduce the carbon footprint by innovating things like you can recycle these jeans back to the system, and they can reprocess, remanufacture it, so that their own carbon emission potentials will go down. They take targets. That in the industries are taking targets here to reduce 5% or 2% year on year based on kilograms of product that they're producing. An example I'm talking about. So the standards. Now here is I'm taken up this ISO. We have heard about in the previous segment of the seminar here were a lot of standards. But these are the standards, and the one beautiful standard that I love it is EN 15804 standards. That's the reason most standard and most advanced standards adopted by the European community here. You can see every product will be quantifying through a carbon footprints here. I've just given an example of another example of shoes. Shoes will have a will be having a material component of carbon emission will be 5.7 kilogram of carbon emissions for one pair of shoes. So manufacturing component will have 1.1 kilograms. The usage will have 0.1 kilograms. End life will generate 0.2 kilograms. And overall, one pair of shoes, which is a brand here, Woodpiper, I picked up, is 7.1 kilograms of carbon emission potential. So this is how the companies are promoting their commitments towards the customers. The customers are very niche. They are selective. And if they have certain values like this, they definitely go with those products to buy that, because they are also aware about the sustainability initiatives that the organizations are taking up. Now, another thing is, why do we need it? I'm coming to that point. I want to clarify this again. Nowadays, in the construction sectors, the carbon emission potentials for each of their products, which has been used in the construction areas, has been mandatory in the European regions, have mandates to produce and generate this kind of reports, LCA studies. I say life cycle assessment for that. Anything that comes for building constructions, could be cement, could be concrete, could be plastic, paper, wood, steel. All those things will be generating and must have a component of a life cycle assessment there. So now because that's a regulation as per EN 15804 in the European community here. Now, if I bid for a customer and I get 3 bids, one of the supplier has given me a value of 1 kilogram of carbon equivalent for 1 kilogram of product, which has been supplied. Now, he has done only a process of cradle to gate approach. The other supplier has given a product values based on from material processing to the disposal activity. So cradle to gate approach. And the third supplier has given me only part of water and toxins produced, and the component is quite lower. So I can't compare which one I need to pick it up. We know the purchasing teams always go with the quantity, the values of the sales. However, this component is something which is to be winning edge for the people who are getting those products from different varieties of suppliers. So it's not comparable apple to apple here. What I will say is, if the suppliers are being given guided up and they have the furnished the details from entire stage of cradle to grade or cradle to cradle approach. So all those values will be fitted up, and I can compare, being a consumer, I can compare it apple to apple here. And based on that, the lowest potential of carbon emissions, I will take it up as one of the component to use in my systems. The reason is, if my raw materials components is low in carbon equivalents, I will be having my own carbon potentials going down. So as a green building concept or those things which is helping up, these all things will be useful for us to compare apple to apple here. Now, what kind of data we need in LCA studies? So we need the waste disposal from the site, waste recycling from the sites, products. There will be different SKUs available in our business. So each business SKUs will have a material mass balance and all. So we have to take that mass balance. Based on that, we have to figure out actual numbers. To an extent, 10% variation in the estimations is allowed as per the rules. So if we go beyond, we don't have meters. Like, for example, I don't have weighing measurement scales for my waste, and I'm estimating 10% on the based on the mass balance variations would be permitted by the law, by the standards here. However, if we get more value additions, because this data will be certainly verified by some authorities, like the life cycle assessment softwares, or maybe if you are generating an EPD, environment product declaration, that also will be having 2 stages of verification through external sources. Now, if that verification takes place, that verifier will need the authentic data here. So if we have metering arrangements for water, fuel, gas, and whatever the resources that we use, that's an added advantage. I think most of the sites, well-established sites, are using any of the ERP systems or SAP systems wherein all the data are fed in for product-specific data. The first step, we can start off with the suppliers, the supply chain department, because the procurement of raw material packaging will take as per the bill of materials. The transportation, where is that raw material coming from? Which part of the world? What is the mode of transport? Air, road, ship, train. So based on that kilometers or distance of miles, you will be taken up, have to give us a transportation distance. Based on that, carbon emission potential will come. And again, in this road transportation, there are a lot of Euro 1 emission, Euro 6 emissions, Euro 5 emissions, which kind of emissions and the trucks are being used. That also is a component of that. If you have that data streamlined, definitely that's good enough. Otherwise, an estimation based on general India specific guidelines will be used for that particular calculation. So coming from the first is supply chain department, raw material, packaging, transportation. The next is the manufacturing. So once the raw material is come to the manufacturing hub, what are the components we are using? Energy, fuel, water, waste, process mappings, efficiencies, tonnages of what has been produced, and what is your scope of work for 1 year data or 6 months data for that product. So it's up to you to decide, irrespective of the scope of work that you have established the boundaries for. Again, coming back to next step is the supply chain, because they are supplying the final products from the manufacturing hub to the customer. The customer is located in different part of the world today and different geographies. So how is the mode of transport there? What is the distance to the customer from, and which part of the customers have gone through each products? So that is something based on the distribution sectors of the emission factors. And finally, how the customers are using that product. Again, in applications at customers, recycling if they are doing it, how are they disposing of the product that is being supplied by us? And finally, the end disposals. So each of these phases will have this detail. It looks very simple in the slide, but it's very energy consuming for the doing all these calculations. And we have to utilize certain software. So that is something which is good for us to do, give us helping in generating the result. The outcome, what does the outcome looks like? So first thing is, if you have defined your goal and the scope for that product specific, the inventories, the outcome will be generated in climate change, global warming potential, eutrophications, land usage, resource depletions. What is the quantity of acidification that takes place due to my product being supplied in the system? ozone depletion, what is the potential for ozone depletion from my 1 kilogram of product, which is I'm supplying to the world. Ecotoxicity, ionization radiation, if there is anything, photochemical ozone depletions, water depletions, and human toxins. So all these things will be covered in the final report, end report. And I'll show you one website which is open for public, so that I can jolly well say that. But these reports are available, user friendly. You can download it, you can use it, and you can also supply to your customers. So that is something useful for generating this. And this is the outcome report an LCA will be generating. I'm terminologizing LCA, which is life cycle assessment here. Now, why do we need it? The reason is we are seeing the bigger picture. The world is changing. We are changing. Everybody has these now. The BRSR versions are getting upgraded. So the government are strict, focusing more on reporting guidelines. So we need to make sure that my product is eco-friendly. Eco-friendly, not in terms of greenwashing, which Madam was talking about, but eco-terms in terms of how I'm generating my reports for doing this life cycle assessments. This report also helps to identify my hotspots. So if I have done my study for this year, I can upgrade my system next year, run the business for 1 year. Next 2025, I can find out and fine tune my report again, doing a life cycle assessment, so that I can show that improvement has taken place. For more 3 kilograms of carbon equivalent in a year for 1 kilogram of product, I have improved to 2 kilograms just because I have improved my energy, which is renewable energy. I have reduced my water footprints. I have brought my raw material suppliers very closer to me, so that my life cycle assessment reduction happens there. So these are the hotspots that I can pick it up, low-hanging fruits. Supporting my ESG journeys. Every organization has their ESG goals nowadays, and this helps us to be more delighting the customers. If we are having this kind of things, it gives a competitive edge to the customers. Finally, in terms of monetary values, it improves efficiency, because we're benchmarking with our own standards and our own outcomes results. It also helps to mitigate the business risk, because the business, if I'm having high carbon efficiency, then definitely that's a risk to my business. I'm using more non-renewable sources. Definitely, I'll be more at risks in the near future. As I said, gaining competitive edge. And finally, standards compliance. So I think India doesn't have that, I think, much standards. I'm not sure, but definitely the standards are picking it up. A lot of Indian companies are doing this. I can show you a couple of cement industries which has submitted their EPDs and LCAs, and it's open for that. So that I am opening here. I'll just go to the website here. This is the website. You can note down EPD International. Once you go there, you can just go to EPD library. And once you're writing down cement and just fine tune it, and you will be able to see here this easily downloadable system here. So for a Portland cement, which is manufactured by Bactin, this is public address, so anyone can use it. This is a company who has generated this report, and this is the EPD report. Now, environment product declaration is the next step after a life cycle assessment. I've not covered much there, but this is a summary of the life cycle assessment here. So you can see this product is having, this is manufactured in Turkey. This has been verified, validated. Each of this report is valid for 5 years, technically. So what is the company background details? What is the scope of work for this product? Where is the boundaries? So which are the compositions of this product that is manufactured? Doesn't have any confidential data here, so nothing is confidential in this. What is the manufacturing process adopted by them? And finally, you will get a report here, which is this one. So they have considered here the A1, A2, A3, which is cradle to gate approach, and they have taken that modules. And this is the report for 1 kilogram of cement. The global warming potential is 858 kilograms of carbon emission. So that's the first thing that I will see as a ESG professional. So this is the outcome, and there are different elements here you can see, and all acronyms are here. So this is how the world is gearing up for this. It really helps the business. I have used it. I've generated one of the EPDs, and it's available. on the system. We have covered we have compared life cycle assessment from a unit manufactured in the business of Dubai and manufactured in America. So we can compare between our intersites also how those products are being more efficient, and we can generate and push back to our operations to upgrade their efficiencies based on this comparison and benchmarking. So with this, I think I have completed and ready on time. I'm maybe short of time. I'm sorry for that. Extending 10 minutes more. So
can you just scroll the slide, because we could only see the thank you slide lastly, that EPD and the last
sorry.
two.
Sorry, just a minute. Yeah, you can see here. Sorry for this. So let me just go back here. Yeah. So this is the website EPD International. I've just gone through that. Let me just see here. So I've just downloaded from EPD International. When you go there, there is an EPD portal there. You can just click there. You can write cement, and this is the environment product declaration that is being used. This is what I was referring for cement. This is manufactured in Turkey. Each of this EPD is having validity for 5 years. Okay. This for when you generate an LCA. LCA can be done by yourself. You don't need a third party who is doing it, because you are own customer of your own product. So your own ownership of the custom product is you yourself. So you can generate your own LCAs. There are a lot of softwares which is having, you just go online, get it, and you can clock in the reports details there from each of the stages. And definitely after that, you can just do your own publicize your report there. You don't need any third parties for that. But if you're going with a verification on EPD, then you need a third-party verifier. So they will verify your LCA report, and then based on that, they will be generating a report for themselves, and that will be submitted to the systems like EPD International, and they will be generating and verifying it and assuring it. So that's how the report is generated. So this is the scope of work. They have covered raw material supplies, raw material transportation, and manufacturing of cement here. And so they have functionally declared units, the regulations, the cutoff boundaries, and finally, this is what they have covered up here. Modules declared is raw material transportation and manufacturing, the first, which is cradle to gate. And finally, here, this is what I was referring, the global warming potential fossils for 858 kilograms of carbon equivalent. So 1 kilogram of cement production will lead to 858 kilograms of carbon equivalent potentials. So that's something which I'm just ending up here.
Okay. So thank you very much, Mr. Bhaumik. So giving deep insight about the phases of life cycle assessment, cradle to gate, cradle to grave, and cradle to cradle, including the giving very simple example like the example of jeans, how the life cycle assessment phases is applied to any one simple product like jeans and shoes. So we could get many insights from your session. Including one important point, how the supply chain will happen, how the future bidding process will happen on perspective of ESG, so that the organizations can prepare the ESG reports and they can be future ready with respect to ESG. Right, and also guiding for the EPD International, which is the publicly available domain, and the organization can directly get the data from the EPD International. Like if they are having the data ready-made available for their product. So thank you very much. Now the session is open for question and answer. So from participant, if you are having any questions, you can write in the comment box, or you can raise hand. I can unmute those person and you can ask.
Ankit, I see a few in the Q&A that has come up for us. There are 4 of them that we are able to see immediately.
Yes, yes. Mr. Sandeep Mandut has asked those questions. So I will I will discuss question one by one and you can answer. So the first question is can reporting be done based on GRI framework and still it will be complying to BRSR requirements?
Sure, that's a great question. So if you see the BRSR itself, right, it has been inspired by different international frameworks, including GRI, TCFD, SASB, etc. So wherever possible and where suitable for the Indian context, they have picked up those things. So what we generally see is if you're putting together a GRI report, barring a few which are very specific to the Indian context or which are very specific to certain requirements, you mostly cover everything under the BRSR. And what we also recommend is when we're working with an organization, is that we put together the report according to GRI, and there is a GRI content index wherein you also mark out which indicators. So there are certain indicators, right? So which indicator is being covered in what section of the report. Similar mapping can also be done for the BRSR in the same report, and whatever is extra, then that can be noted down in that particular table or section itself. So what that does basically, why BRSR is being produced is so that there is less reporting fatigue. So there is this term called reporting fatigue where organizations spend a lot of time just writing these reports.
Yes, yes.
So ultimately, if that is possible, and that is what the aim is. So yeah, I hope I've answered that question. Tanushka, in case you need to add something, you can always do that. Huh?
Yeah, sure. No, I think you have covered everything. It's just that, yeah, after alignment with GRI and BRSR, what you can do is you already have that alignment. So whatever the extra questions are there, you can just address those, and others are, readily you can import from your existing whatever framework you are utilizing.
Okay. So second question is, what do you mean by capacity building when it comes to ESG reporting, and what are the key things that need to be considered in capacity building?
Okay, so I'll take this first in case there's anything that I miss out, Tanushka, then you can add it. Yeah, that sounds good. I'll take these questions first. Yeah, okay. So in terms of capacity building, now what does capacity building really mean? It can either be called an awareness session or a sensitization session. Basically, a capacity building would just be much more in depth, and it depends on whom you are trying to focus on. So for example, if it is related to disclosures, to sustainability reporting, then every stakeholder who's going to contribute to that. A sustainability report again is across E, S, and G, right? So you will have people from the operations, from HR, from legal, all of these helping you to put together the sustainability report. So they need to understand what that subject is. So a capacity building workshop or a session will primarily help build that capability where they understand what is this and what is their role going to be in that particular area. It will differ for every sector. It will differ for the kind of stakeholder you're engaging with. But basically, that is what it will do. That is what a capacity building will do. I think there was only one part to this, right? Anything else? I don't think there was any. What are the key things to be considered? Yeah. What needs to be considered is what we did today also was a mini version of a capacity building itself. Yes. Right? So we introduced you to what it is and what are the implications of it. You may take it a step further to bring in what it means to your organization specifically. You can understand your organization better. You can understand your risks better. So you can bring all of that together as a sustainability professional that everybody in that particular cohort can understand it and then implement it in their activities.
So basically, in simple words, we can say the awareness session with respect to various requirements of ESG. Means continuous session, not in just 1 or 2 days, but continuous capacity.
Yes, correct.
Okay. And the third question is, please explain difference between sustainability goals, matrices, and ESG roadmap.
Okay. So firstly, I think Tanushka already explained that sustainability and ESG are used interchangeably, right? They are always used interchangeably now. So when you are having a goal or a target, it is where you want to reach. That is the end goal. So say, for example, a company has a target of reducing its emission intensity by XYZ by say 2030, 2040 or so on. So that is the goal or the target. What a roadmap will essentially do is it will help you chart the path to reach that goal. So there will be certain intermittent goals you will have. That every year on year, I want to reduce it by so and so. So that is the roadmap. Then you will also identify based on the roadmap what would be the action points you'll have to take. So maybe you'll have to go on to have more renewable energy. You'll have to replace your scope 2 emission sources by something that's cleaner. You'll have to bring in energy efficiency initiatives. So that roadmap will basically help you chart the path to reach the ultimate goal. Don't get confused between the terms sustainability and ESG because they are used interchangeably in most cases.
Yes, yes.
Tanushka, I think in case there is something in this part that you can add, I think she will have something to add in this case.
No, I think I'm good, Ashwini. Go ahead.
Okay, okay. Yeah.
And the next question is, what is the role and application of ESG and sustainability in healthcare business sector, basically healthcare industry?
So role and application of ESG and sustainability in the, yeah. So this one, you will have to conduct something called a materiality assessment. So Tanushka briefly mentioned about a materiality assessment, right? So what a materiality assessment will do is for your sector and for your organization, what are those top 10, 15 important topics that you will focus on? So when it's healthcare, I think biomedical waste under the waste category is something that is at the top of my mind that I can think of immediately. But similar to your organization, there will be different organizations in the same sector. So based on it's a process basically where you have to conduct a materiality assessment, which will differentiate what are your topics in comparison to maybe an automotive or maybe a service sector organization, and then it will help you chart that path. So what will it be for your organization? You will identify it only through that materiality assessment exercise. As I said, one of the examples is probably biomedical waste and things like that.
Okay.
Yeah. I think I'm facing some network issues. Tanushka, maybe you can come in and take the rest of the questions. You're saying your internet connection is unstable.
Yeah, we could feel it. Some interruption is there
Yes.
in your voice.
Yeah. Is it okay if you can pick up the rest of them? I'll switch in wherever required.
Yes.
Oh, that's fine. Yeah. Yeah. What are the other questions?
Next question, I guess Mr. Bhaumik can answer. Can any of the speaker recommend any software tools, sites for carbon footprint calculations?
There are many softwares. You just Google it up. There are local agencies also in India. I can name some of them. EcoChain is one of them, which is a Netherlands-based company. I believe SGS also is in this business, so they are also helping out to make sure you can work out with them. Other one is One-Click LCA. So these are softwares. I think One-Click LCA is just simple to you just download it and use it. Not sure about the financials, but these are some things which I have taken up.
Yeah, I think Spera and Gabi are other two players which are most widely used in India.
Gabi,
so you can also refer to that.
Okay. I guess we have discussed this materiality assessment and more detail LCA. Mr. Yaswant is asking, can we share some learning resources? So I guess we have shared one of the tools, that is EPD International. So the tools are available. Whatever material they have listed, that you can have a go through in that publicly available portal. Next is
so for materiality and double materiality, you can refer to the widely available GRI resources. I mean, that is the best resource where you can read up the definition and the detailed methodology. And I'm sure Bhaumik can help out with the LCA.
Okay. The next question is for Tanushka, for you. In case of CDP questionnaire, is there any grading system for the organizations who are responding?
Yeah. So as I told, that's the unique feature of CDP, that it's a questionnaire which ultimately results into a disclosure. So there is a grading process where organizations are graded between A to D. And it is based on the completeness and quality of the responses that the organization is providing. So there are certain areas which will be applicable for them, and there are certain areas which won't. But if it's not applicable to them, then the organization need to provide a rationale why it is not applicable to them. And in case if they are not reporting it in the current cycle, then what are the plans? And it needs to be backed by the evidence. In case these completeness are missing, then obviously the rating will be lower. And in case, the quality of the responses are there and it is backed by evidences, then organizations get better grading.
Okay. So to taking the session at
Some of
the
the
end.
comments
Let us,
also.
yes. So let us have the last question from the participant because we are also need to take care of the timing. So one question is from generally corporates are too cautious to pass on the materiality questionnaire to their clients, and also clients do not answer those questions. So it's a practical difficulty. Can anything be done in this manner?
I think capacity building is one of the things. Engagement with them is important. They need to understand what role that this with them responding to this will really play. But yeah, I echo with that. It happens. It happens in many cases that you send out a questionnaire, you may not receive a response. But yeah, I think you were saying something, Tanushka.
Yeah, as a third party, I mean, some responsibility falls on us as well, how rigorous we are following the methodology and how, robust our stakeholder program is. Because, sending out just a questionnaire probably won't do. But if you conduct a workshop, engage with them, especially senior leadership doesn't, like to fill in the questionnaire. So how do you engage with them? How do you, capture their views? So you have to, you have to make it a mix of both a questionnaire and also direct stakeholder engagement. Probably that would help.
Just want to ask one question, Ankit.
Yeah.
Am I audible?
Yeah, audible.
Yes.
Yeah. One of the slides of SGS, I saw something being mentioned about the reporting being done either in the annual reports in an integrated manner, or the reporting is done as a standalone sustainability reporting, or it is also done as part of your financial reporting. One slides, how the reporting is done, there was a mention. All I wanted to know is, generally, by and large, almost all listed companies, they are covering their disclosures in the annual reports in an integrated manner, by and large. So, which is already, the moment it gets into your annual report, it gets into that format, it is an assurance by itself. What is your experience? Where is the need for businesses to come out with a standalone reporting? By and large, investors also go by the annual reports, because since I saw these three combinations, I wanted to know which is it that is being used, because whatever annual reports that we've been reading, almost all these disclosures as part of your annual report, once it gets under the statutory structures, that itself is an assurance. I just wanted to have your views, whether you see all these three formats existing in the marketplace.
Shall I take this, Tanushka? Yeah.
Go ahead.
So see, you're right. So there are all three formats that are used. Primarily, also I'll tell you what, integrated report was something that came up around 2018-19. That's when the uptake in India also came up, because SEBI was endorsing it. They didn't really make it a mandatory. It was a voluntary requirement. And that's where we saw a lot of these big companies going for an integrated report. So even today, what we see is a lot of these mature companies. So when I say mature, what it means is they have been doing a sustainability report for almost a few decades now. So because they've been writing it on a regular basis, it's very easy for them to integrate it in the financial disclosures.
Absolutely.
But that's not the case in a lot of smaller organizations. Because for them to really have the financial implication being identified for ESG, it's an altogether a very different step, right? So what we see is, depending on what kind of a query or what is the motivation behind putting that report together, we see the report being developed. For example, if they have been doing it for a long time, the motivation is self-driven, you will see an integrated report which is very beautifully written. You can actually make out the linkages and the trade-offs between the capital as well, and then there will be a BRSR as well. Some of them will be motivated by a customer requirement or an investor requirement, in which case they will have a standalone sustainability report. It will only take care of the things that GRI is specifically asking for. And then there'll be some who are in between, wherein they are still transitioning from the sustainability report to an integrated report, wherein certain aspects will be covered in the annual report as well, and then certain aspects will be left in the sustainability report. But with respect to assurance specifically, just putting it in the financial report doesn't mean that it will be assured, because an auditor will only be taking the responsibility for the financial numbers in that report, in that particular report. They will clearly mention also. That's why this requirement of BRSR core being assured by a third party has come up, wherein they specifically want companies and assurance providers to take the responsibility of what non-financial parameters they are assured. Yeah, so that is how it is. We see all three of them, but depending on where they are, whom they are responding to and all. There's no right or wrong. It depends on the preference and whatever suitable to that particular organization.
Thank you.
Okay. Thank you so much, everyone. And thank you, Ankit, for
our session is coming towards the closing ceremony. So we will be having two formalities. One, we will have the one common group pic with all speakers video on. Padma is there. I would request Padma ji to do these honors.
I guess she's not there, right? Paduji, you're there? I guess she's not there. Fine.
Okay.
Where's Atulji is there, right?
Yeah. And I will be sharing one poll. So I would request all participants, I'm launching one poll to give their feedback about the session. I have sent a request for poll. So you can just reply on the questionnaires of this poll.
Request our participants to give their poll, because that's something, one of the crucial evidences that we are using for measuring our quality objectives.
We are also working continual improvement. So this is one of the tools which we use for continual improvement. We have received the answer from 70% of the participants. Just will be waiting for another 15-20 seconds.
I think we can end the poll now.
Yeah. So can you see the results of the poll on screen? Atulji?
Yeah, just a second.
Yeah, we can see that now.
Okay.
Yeah.
Now I can see.
So that's a good rating of 85%.
Yeah, 85% excellent. So I would request now Atulji to have the honorary thanksgiving to speakers as well as our mentors for this marathon month of World Quality Month. So over to you, Atulji.
Thank you, Aniket. The whole session for November has been a lot of initiatives from a lot of sectors, a lot of people who have come across. Well, especially thank you for joining on our last leg of our November Quality Month of initiatives. Thank you, Bhaumek Amin, who's timing in from a long time lag with differences. And also, of course, from SG's, both the girls, Tanushka and Ashwini, thank you for joining us. And of course, Mr. Anu Bhatnagar, who has been joined us despite his health. I would say that's very nice of him to come across and share with us his views. Thank you, Rama ma'am, CCC, for engaging with us for a long and this managing this whole show also. And of course, the support team, Padma and who's been handling us, and Aarti, who's actually been one of the main contributors to this. So backing team is definitely the main people who are actually helping us to get through this on the road. I thank you once and all, and thank you, dear participants who have been regular with us and joining us on these small, short webinars that will be conducted. We are looking forward for a lot of detailed discussions going ahead, and we keep on having 1 or 2 sessions happening, which will like gauge us into the little more detailed oriented format. Ma'am, in case you would like to add something more, I would be more happy.
This is fine, actually. Just would like to thank all of them, and just some quick numbers I would like to share. Maybe between last month, the World Standards Day, and this 9 sessions, we did about 10 sessions. We had close to about 3,000 registrations for all the sessions. By and large, today it's very tough and challenging for participants to take permission to take off from the workplace, because most of the stakeholders are from the industry.
Yes.
So what they do is we upload all the videos, we share it, we communicate with all the registered delegates. That's why they all register. Some may not be in a position to join, but they're all watching the videos.
Yes.
Because at the end of the day, it's learning, knowledge dissemination. Both the associations are not-for-profit organizations, and we don't do commercial programs. Our focus is only on knowledge dissemination to industry and stakeholders in the domain of standard certifications and regulations. Topics like ESG, the origin is from financial regulations. And so one has to understand that very well to focus on ESG. So there is a financial and non-financial elements attached to it, a lot of gray areas still in the market on it. So we continue to do a lot more such sessions. And today it's just a financial mandate for a few numbers, but then with RBI mandate that's almost getting ready, it's almost there. It is applicable for every MSME business, and they need to, not only for this, even for the value chain and supply chain also. So our interest is actually to educate, and we would like to see frameworks that are being developed for micro and small businesses separately, medium enterprises separately, and large enterprises. What is developed now at the moment is actually for larger enterprises, and the business maturities differ. This is what we've been discussing, and in all those advocacy forums. Our endeavor is to continue with all this. We will keep inviting all the speakers who are passionate. I guess SGS is joining us. This is our 4th session, I remember, because the first conversation we had on ESG was about 2 years ago, where we've invited SGS. So we keep inviting all the stakeholders. Knowledge dissemination is our mantra. That's in our DNA. We don't look for anything else out of this, but it takes a lot of time and efforts to organize 9 sessions back to back every Tuesday, Thursday. It was a marathon, but for the fact that there is no physical structure, it's not a physical in-person conclave, but otherwise all your structures are the same. You know, it's very tough and challenging. I know that the backend teams were used to, the days they used to work till 11 p.m. in the night, and it was mad schedules, but thank you so much. And we have our regular audience. Most of them, they keep attending regularly. As an association, CCC is a 4-year-old baby. We are a COVID baby. Maybe just association was found and the COVID hit us. MSCC is actually, again, it's like a startup and a young child. We have a post-COVID. We have a long way to go. We'll keep inviting you all. Do join us. Do share us your experiences or any suggestions, recommendations for improvement. That's it from us. Thank you so much. We'll continue to do more such knowledge sessions and keep visiting we'll upload all the videos. Some are already done, some are in the process. We'll be uploading everything. So keep joining us. Thank you so much once again. Thank you.
Thank you. Thank you for joining us.
Lastly, thank you so much to Mr. Anil Johri, ex-CEO NABCB, for keep inspiring us for such session, getting the speakers from his contacts, working day in and day out. And we thank you very much from CCC and MSCC.
Incognito. Sir prefers to be in an incognito mode all the time, but keeps driving us from the back. Thank you. Thank you, sir.
Thank you, sir. Thank you, ma'am.
Thank you.
Thank you.
Thank you, sir. Thank you. Bye.
Thank you.
Thank you, everyone. Bye-bye.
Thank you. Bye.